All right, y'all. Big fish motivation. Big Fish FX, another solid video that I want to drop for you guys. So remember I posted when I ran up to $6 to $92 with this trade coming down, right? So this is the exact same setup that took place, and this is pretty much an update. I just want to share with you guys what I see and what I saw regarding this. This was last week where it was pretty much playing, you know, doing this thing, whatever. So here's the thing: when you're trading, right? When you're trading and you're looking at the chart and you're watching the chart do its thing, you have to look at everything in the standpoint of why is price doing what it's doing. You have to look at it from the perspective of, you know, what are these institutions doing? You know, because a regular retail trader just seeing a descending triangle, even seeing it go up like this, they will still anticipate it to run down. But the thing, when you look at what you're seeing, you understand that one, the only reason why price even tanked to this point is because of what? Liquidity sitting at the bottom. Now, understand, when liquidity was grabbed and price ran back into the triangle, this is no longer a valid descending triangle. Unless, I mean, you want to adjust it and put it down here, however you want to play with it. But I wouldn't really too much care for it that much. So someone will probably do something like this and try to play with it to fit their emotions. And that's not how to trade. You know what I'm saying? It's not about your emotions. It's all about what the chart is showing. So now if you look at this, all of the stop losses were grabbed. So stops, you know, everything pretty much stopped out. And for individuals who had stop losses up here, price ran up and took that. So now if you look at what's going on, you also notice this low is higher than this previous low right here. So it's pretty much telling you that now what's sitting up here. You have to think, you have to ask yourself, what is sitting up here? When price is continually going down like this, right? What do you think is happening as it's doing that? You have to really think, right? So now this is what's going on, right? So look at the crosshair. So if you look at the crosshair, once price shoot down like this, a regular retail trader will automatically put a stop loss up here. Cool, that's any trader, you know what I'm saying? Because this is a previous high. Now as it ran down and it came up and it pushed up even higher, some individuals pretty much put their stop losses up here. So let me mark these zones. Stop loss would be up there. I'm gonna make it red. Let's make it red. And then stop loss would be right here. Let's take this line here. Boom. Let's run this down here. Boom. So you have stop losses sitting up here. Now this move took out those stop losses, right? Those individuals who have stop losses up here, a lot of them move their stop losses down here, right? Let me delete that. Right? So stay with me. A lot of them, they move their stop losses down here so it can be in profit. Now, what's taking place now is, look at this clear manipulation. What's taking place now is it ran down, stop loss is sitting here as well. So now you have stop losses at the bottom here for those who have buys, and stop losses being pushed down even more down here for those who are still in the sell. So now a lot of people or a lot of traders will probably move their stop loss down here from here in order to have a tighter stop and be in profit. Or even new traders seeing it doing this, thinking that it's going to keep on running down, they're doing the same thing. So now what you have is stops here, stops here, stops here, right? So now, and you have also have stops here. Now this ran down here, took the stops, boom, clean. You know what I'm saying? Because also there were stops down here. So with that, it came, took those stops. These stops got taken out. All of this, all these stops got taken out. So now it came back, retrace 88.6. I can tell. And this is a nice harmonic forming. This was a Gartley harmonic. Nice, beautiful, perfect Gartley harmonic that formed within the triangle. Like I always say, man, the market moving harmonics. So now, what do you think is gonna happen now? If there's now this is another low that was formed, right? So now if another low is formed, now you gotta ask yourself, what do you think is gonna happen now? Stops were already taken out down here. Nice order block anchor right there. So if it's running up, if it's trying to run up, what do you think it's really trying to do here? Y'all like, y'all got it? Like y'all want a clue or what? So this is what you have to understand about the market. Let's make this red. And now it won't let me do it. And in here is liquidity. So so all in here is sitting money, orders that can be liquidated, all in here. And remember, the market hunts liquidity. It hunts for it. So if all of it, all this right here is all stops that can be liquidated, money, clean money for the institutions, you know what I'm saying? What you think it's doing? What do you think it's doing? It's hunting stops. It's hunting the liquidity in the market. That's why it didn't run all the way down. It only ran to liquidate orders down here, came back into the actual move, and now it's really trying to run up to liquidate these orders. Now, if you look at the overall picture though, right? If you look at the overall picture, liquidity was already sitting up here. It ran up and took all that out, right? It came down. Now it's building liquidity all up here. And it can likely go up and take all this out and even still come back down. Or it can continue going up. But what you have to understand, on a day-to-day basis, you want to look for what the market is more attracted to. And you want to use your confluences for that. You want to use your different strategies for that. If you only using one confluence, one thing to look at this, and you don't have stacked confluence, one, your confidence is going to be low in terms of direction of the market. And two, you won't have a strong confirmation. Because this can be a nice Fibonacci retrace move going down, but it hitting the negative 27 and running back into the zone is, you know, without you knowing what's going on overall, you'll think, you know, the Fibonacci failed. Well, you have to understand Fibonacci, the way Fibonacci is set up, you know what I'm saying? Like it's not like the institutions and you know, the algorithm isn't set up to run through stops and know that you are using Fibonacci. This is why Fibonacci itself, this is why harmonics are pretty much what you can use to measure Fibonacci fake outs, if you understand harmonics. So something like this, and it start running back up, whenever a Fibonacci setup doesn't complete all the way, it's forming a harmonic. And you could, that almost 100% of the time, whenever a Fibonacci setup, if you draw a Fibonacci from here to here and it doesn't complete to the 61.8, it's forming a harmonic. If you understand harmonics, you can catch that. Instead of you being disappointed that it's not completing the Fibonacci, you can catch that harmonic reversal easy. Like this right here was a clean harmonic reversal, because now seeing that it rejected off of a 88% off of Fib, seeing that, then that's already an indication. Even if you go on a lower time frame, you'll see how it failed to break even lower. But this 80, the point that it came down into this order block and kept being rejected, and then it started consolidating, and then there's gaps up here, and there's so much confluence going on, it's clear that a harmonic is forming. So that's why I say you have to learn as much as you can, so you can stack as much confluence as you can. So yeah. Just wanted to share this with you guys, just to kind of you know, give y'all a different view of the charts that a lot of people really not going over. But as always, if you need any coaching, one-on-ones are available. If you need the course, link is in the description. You can get the one-time payment to get the entire course, which is constantly updated with new videos, or you can get the 6-month installments. So with the 6-month installments, you won't get the entire course with the first payment. You'll get the first section of the course, and as you pay monthly, more sections will be added. Once the 6 month is up, you have full access to the course. Not only that, you have full access to whatever other videos are added periodically. So, you have lifetime coaching with that. So yeah, if you need that, the link is in the description. Please subscribe. Comment whatever videos you want me to go over, whatever setup, whatever chart you want me to go over, and I'll run through it. But let's get it, man. This is beautiful. This is such a beautiful setup, and I'm so in love with it. You know what I'm saying? Whenever I see stuff like this, I am in love. But if you notice what's going on and you can pinpoint this stuff before it happened, you are pretty much becoming a skilled trader, and you could pretty much understand what's popping. So look at how many times it hit this trend line, right? And in this trend, this could have been a channel to confirm a trend going down, but instead we're getting a lower or a higher low being formed. So market structure is shifting, and another higher low here. A high was broken right there, and it looks like it's running up to liquidate these orders up here. So let's see what's up. Let's see what happened. Big fish, y'all have a wonderful day. Please subscribe, comment, share, like, all that good stuff. Love y'all.